Conditions easier. Leadership. Did I get that right? You're pretty bullish?
That's the ladder. That's the ladder we climb.
Yeah, all that has to go right?
Some degree of it, but not all of it together, but certainly unfolding as we head into 2026. And too much has been talked about negative surprises, and obviously so, right? I mean, there's been a lot of negative surprises, particularly what occurred over the weekend. But it hasn't impacted earnings to a level that everybody expected. It hasn't impacted the consumer to a level that everyone is expecting. And yet, we still haven't seen the price hikes from the tariffs, which we can't say that's not coming. Certainly there's some signs
of it. On any of the things you mentioned, because someone could just come back and say, yet. We haven't seen the inflation from the tariffs yet.
Right.
We haven't seen oil prices necessarily react to what could potentially happen there yet.
Right.
But you don't expect any of that to be material.
Not material, and if you build a strategy off a yet, you've basically underperformed for a really long period of time.
That's beset a lot of investors over the last couple of years, right? I mean, when the Fed even started doing their hiking regime, well, we're going to have a recession. Well, we haven't had one yet. Never materialized.
That's right. Inverted yield curve. Never happened before that long of a period, but yet not go into recession. So you have to ask yourself, each step of the way, what is the resiliency factor? Has something really changed in this last few years? And we think the learnings coming out of a terrible healthcare situation called the pandemic, of what corporations had to do to get through that time period, they've kept those learnings and they've been able to maintain margins. And yet, what do we have now? Generative artificial intelligence. Producing efficiencies, and still people are skeptical about it.
And you think earnings are going to be able to justify not only where the market currently sits, 22 point whatever times, and you could get multiple expansion?
Not yet. Not yet in that cards, right? To that point where you can go from 22 to 23 or 24 times. Sure, you could in a blow-off top, right? But at the end of the day, it's really about profitable production. And that's coming in 26. You're not going to see it in the third quarter and fourth quarter. All of a sudden, you see massive positive revisions. But for fiscal year 26, that's what we believe.
And you're not, when you look at the events over the weekend that you referenced, and the retaliation today, and the way that the market has held up in the face of that, are you declaring that you think this is the extent of it?
No.
And no, you're not. No. Well, what happens if it gets worse?
Well, we've seen periods of time over the course of history that it's just not one event and it stops. So you can't expect further escalation. But the markets are telling us right now, particularly the oil markets, that there seems to be an antidote out there, and that means no further escalation as to what the worst case scenario is. Well, again, early days.
That's probably why the market reacted the way it did today, right? Because you send missiles towards a base, you alert people that the missiles are coming, you don't shut down the Strait of Hormuz as the other sort of I hate to say nuclear option because we're not really talking about like that, you know what I mean? But the market would look way different if that was on the cusp.
It would have been similar to the other precedents that happened over the course of time in history. And right now you're starting to see, I think oil at one point in time today was down 5%. So the question is 30, 60 days ago, did something get anticipatory up ahead of all this? I'm not a geopolitical strategist, but what I'm focused on right now is, why is the market at 22 times earning right now? It's there because of the companies that make up the index. And is this a trampoline event overall for the tech sector to become the leader again? We think so.
It already has, hasn't it?
It has since April 2nd.
Well, that's what I mean.
But
we're 2% away from a new high.
Exactly. And but if you look at 1 year ago from today, it's almost a round trip. The rest of the market has helped up the leadership of tech. But now, if tech takes that leadership again, that's where you get your move higher that people are not expecting.
All right, we'll leave it there. Chris, thank you.
Thanks, Scott.
Chris Heisey right here at Post 9. Up next, we track the biggest movers into the close today. Christina Partsinevelos is back with that. Hi, Christina.
Hi, Scott. Well, a major wealth management firm surging 7% after rejecting merger talks, while a tech hardware company tumbles on news of a massive debt offering that could dilute shareholders. Details when we return.
Buzz.com.
All right, we're about 15 from the closing bell. Back to Christina now for the stock she's watching. Tell us what you see.
Let's start with Northern Trust shares because they're up about 8% after the bank said it's committed to remaining independent. This according to Reuters. And this happened after a report from the Wall Street Journal last night said the Bank of New York Mellon had approached the wealth manager about a potential merger. The report also said BNY was even looking at submitting a formal bid to Northern Trust. You can see Northern Trust shares up 7.5% right now. Meantime, Supermicro, the S&P laggard today, the worst performer after the server assembler announced plans to offer $2 billion in convertible senior notes notes due in 2030. The proceeds will help fund working capital needs, but shares you can see are 9% lower because convertible notes can be exchanged for stock, which would potentially dilute existing shareholder stakes, hence the fall. Scott?
All right, Christina, thank you very much. Christina Partsinevelos. Still ahead, Tesla shares charging higher today. Tell you what is driving that move coming up. Bell, we'll be right back.
Those things.
All right, coming up next, we'll run you through what to watch for when KB Home reports an OT. That and much more in the Market Zone next. We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day. Plus Tesla, the top S&P 500 performer. Phil LeBeau with the details there. And Diana Olick looking ahead to KB Home in OT. We're about the highs of the day, Mike. This is a pretty interesting price action and a response to what we're watching over in the Middle East.
Whenever you have one of these fast-moving geopolitical situations that everybody is fixated on and you have all the lights on it, it has the potential for being a chilling effect on risk or a clearing event for risk. And I think you've kind of moved through those two possibilities over the last, 24 hours, let's say. It's interesting that the market was willing to kind of back off and wait and see and get the inference for exactly what this was, which, as I was saying at noon, we at least had to be open to the possibility this is kind of a stage-managed, face-saving exchange. Okay, that's where we are right now. Where does it bring us? Brings us back to, last Thursday's high in the S&P 500. We're releasing tension a little bit. I think one of the reasons we've been able to stick around these levels for weeks, really, just kind of tethered to 6,000, is because it's not a new level. 6,000 we first got to in early November. So we're 8 months in. Earnings are up from there. You're at the same price level on the S&P. You're down 1 PE point from 22.5 to like 21.5. Credit's fine. And all of a sudden, people are talking themselves into the idea that tariffs are going to be like magically absorbed into the economy without that much disruption. It might be the case, but I do think it's interesting how we're kind of now glass half full at the same level we were at a few weeks ago. It's probably, constructive here, although you got to see exactly what carries us to the next step. Because today, Tesla's not going to be up 8% every day.
Sure. Maybe it's a continued softness in oil. Maybe it's something that Powell says tomorrow. He's not going to surprise you more than likely because this appearance coming so soon after the Fed meeting.
He's going to try not to surprise anybody.
Well,
he's going to get a lot of questions.
Yeah.
He's going to get pounded from many Republican members
for sure.
to say, why aren't you cutting rates? And the market is starting to kind of, edge in that direction. 2-year yields down quite a bit.
Not only the market, Bowman and Waller.
Well, right. And that's why the market is, I think, getting dragged that direction. The point is, you can construct the case for why we've been mostly just kind of consolidating and building a new base and maybe gathering up some potential energy. We'll see if it does play that way.
Yeah, not to mention Goolsby, who sounded like he had a toe back in the water, almost wanting to put his whole foot in, but we'll have to wait and see. All right, Phil LeBeau, Tesla, as we said, biggest gainer on the S&P. This is all about what was a pretty limited robo-taxi rollout?
It was very limited, Scott. And if you got an invitation, by the way, mainly to influencers, people who are very positive about Tesla so they could post on social media, what you saw, if you go and you look at those videos, this was an uneventful launch yesterday in Austin, Texas, limited to a geofenced area. 10 to 20 vehicles providing rides for most of the day. Analysts, they all came out with notes today saying, clean start, now what? How quickly will service grow? That's really the bottom line here. It's not that they've started a robo-taxi service. It's whether or not they can ramp up as quickly as many believe they have to in order to catch up with Waymo and other competitors who will be out there. By the way, UBS raising its price target on Tesla today to $215 from $190. And as you take a look at shares of Tesla over the last year, keep this in mind, Scott. Next week is when we get Q2 deliveries. That is a data point that you don't need influencers for that one. What you get are the numbers, and that will tell people just how much deliveries are struggling relative to last year.
Therein lies the tension, right? The fundamentals of the current business versus the dream of what Elon Musk really wants this company to be, and that tension meets, and we'll see what happens.
Absolutely. Yeah, and look, he has said, Optimus and autonomous, those are the future for Tesla.
Yeah, Phil, thanks. Phil LeBeau. All right, Diana, tell us about KB. What to look out for?
Well, Scott, KB is the second builder to report after Lennar's mixed report last week. KB had already reduced its full-year revenue guidance in its Q1 results back in March as it noted, quote, muted sales. CEO Jeff Metzger said in that report, consumers are working through affordability concerns and uncertainties related to macroeconomic and geopolitical issues, which are causing them to move slowly in their home buying decisions. Has that changed? We'll see. In that report, though, the company also decreased its average selling price and margin expectations. we'll be watching to see if they continue to drop prices as the supply of newly built homes is pretty heavy right now. KB is on the lower end of the price ranges, so that could help. Mortgage rates, though, were rough during the quarter, shooting over 7% in April and settling into this very narrow range, right around 7% in May, and still around there now. We'll see if KB got any boost from markets settling in May and this new normal in mortgage rates. Scott.
All right, Diana Olick, thank you very much. We'll see you in OT when those numbers hit. This housing market needs some sort of something. Some
There's no doubt about it. It's probably kind of exhibit A or B in the dovish case for why the Fed should be leaning toward cutting rates sooner than not. Now, we don't really know what happens to long-term rates and mortgage rates if, in fact, we go 25 or 50 basis points lower on the short end. But there's no doubt that that is a restraint on overall growth. It's a restraint. Residential investment, residential construction is not really carrying the load for the economy right now. So you put that in kind of one category. On the other side, obviously, the AI theme kind of has no quit. What I'm interested in, though, is the way the market has decided to just get so frisky about these things. I mean, you have all these new follow-on ideas that are moving. We mentioned Tesla, up 8% on honestly really not much of anything new. You have Circle today, up huge again, a recent IPO. It's up massively in a few weeks. Now, Circle's the new CoreWeave. CoreWeave was the new Supermicro. Supermicro was the new NVIDIA. So we just kind of keep finding new ways to get speculative, overexcited in the short term. I was talking last week about how that can be kind of an erratic flow into the market, but for now, it's helping. It's actually keeping people interested, and it's keeping it hard to be short or bearish on certain parts of this market. So I think when we came back to within 3% of the all-time highs, that happened a couple of weeks ago, it was very, very plausible, in fact, very probable that eventually within weeks you're going to probably make a run at those highs. We're still in that situation right now, kind of within striking distance, and it took a scare. It took the tariff scare to kind of pull back the slingshot and get us higher. Maybe it takes another geopolitical scare as we got to sort of, again, create that shakeout recoil effect, and we'll see if that's enough. But, we've just noticed in one day how quickly the story can change and how quickly we can sort of reinterpret the same events in a more positive or negative way.
Yeah, well, the market's not going to take its eye for any reason off of the Middle East to see if, this was it. And see what happens to the oil market. Obviously, oil falling sharply today helped the overall picture because we're going to go out pretty much at the highs of the day. Dow's pushing 400.
Yeah, this is definitely the highs.
Yeah, you're going to go 60, 25 on the S&P. Good for 57 or so points there. So we'll watch all of that. We'll send you into overtime with the bell ringing, and we'll see you on the other side tomorrow.
That bell marks the end of regulation. The International Swaps and Derivatives Association will begin the closing bell at the New York Stock Exchange. SS&C Alps Advisors and Ladenburg Thalmann Index doing the honors at the NASDAQ, and quite a volatile day for the markets with the latest geopolitical developments. The S&P and NASDAQ closing at session highs. Oil, the big story, plunging today. Prices had jumped more than 4% overnight as the U.S. bombed Iranian nuclear sites. The energy sector was the worst performer with that drop. APA, Halliburton, SLB, and Liberty Energy were your biggest laggards. Yields moving lower today as another Fed governor floats the idea of a July rate cut today. This time, Michelle Bowman. That move sending home builders higher. Some of your biggest movers today. Circle continuing its rally, now up 75% in the week. This is the stock's 12th day of trading since going public and opening at $69. It's now above $250. Tesla leading the S&P following its robo-taxi event this weekend. We'll have more on that ahead. And the cyber stocks all higher on concerns that Iran might potentially retaliate with cyber attacks against the U.S.
Well, that's the scorecard on Wall Street. Welcome to Closing Bell Overtime. I'm Morgan Brennan, along with John Fort. And as Iran retaliates for Saturday's U.S. attack on those nuclear facilities, we have a great lineup of guests to talk about it, including former Defense Secretary Mark Esper.
Plus, a look at where negotiations with Iran could go from here with State Department veteran Richard Haass.
And we will get insight into why oil tumbled 7% today.
But we begin with the very latest on Iran. Let's get to Megan Casella in Washington. Megan.
Hey, guys, a very busy afternoon in Washington as this was a very fast-paced story unfolding throughout the Middle Eastern region as the Iranians launched both short and long-range missiles aimed specifically at the U.S.-run Al Udeid Air Base in Qatar. We just in the last few moments heard from the president for the first time directly on this. He posted on social media. He said Iran has officially responded to our obliteration of their nuclear facilities with what he called a very weak response, which we expected and have very effectively countered. The president said there were 14 missiles fired, 13 were knocked down, 1 was set free, and the president says he's pleased to report that no Americans were harmed and hardly any damage was done. Most importantly, he says they've gotten it all out of their system and there will hopefully be no further hate. I want to thank Iran for giving us early notice, which made it possible for no lives to be lost and nobody to be injured. Perhaps Iran can now proceed to peace and harmony in the region, and I will enthusiastically encourage Israel to do the same. So, guys, a few things to pull out of that specifically. One, of course, we had heard these reports already. No Americans, no Qataris, no deaths at all or casualties, and also no damage to the airbase from these missiles, all of which appear to have been intercepted. The more notable part here, one of them at least, is saying that the U.S. did have a heads up from the Iranians. The president is confirming that there, and there had been some reporting around that this afternoon, that the Iranians gave both the U.S. and the Qataris a heads up that this was coming. The way that has been framed in reporting, especially by the New York Times and others, is that the Iranians needed a way to symbolically respond or retaliate to Saturday's attacks, but that they wanted to do it in some way that gave both sides an off-ramp or an exit ramp. So with the president confirming that now and suggesting that he wants to now proceed to peace and harmony in the region, it does raise the question of whether all of these parties, the U.S., Israel, and Iran, might be able now to get to the negotiating table to work on some sort of diplomatic solution. The White House was saying earlier today that is still their goal. That's what we have to wait and see if that comes next.
Okay.
Guys.
Megan Casella, thank you. And of course, that perhaps speaks to why we saw crude oil plunge today and we saw stocks closing here right at session highs, this idea of an off-ramp. So let's get some perspective on this evolving situation from one of the few people who actually understand exactly what it's like to be in the room, the Situation Room, during these key discussions. Joining us now is Mark Esper, former Secretary of Defense. Secretary, it's great to have you back on the show and to get your insights here. Welcome.
Yeah, good afternoon, Morgan.
So that's where I want to start with you. Yes, we saw this strike, a very weak response, as President Trump just indicated there, and a response that apparently the U.S. as well as the Qataris expected or got some sort of heads up on. Does this, in fact, provide an off-ramp for retaliation by Iran?
I think this is probably the end of the United States directly attacking Iran again. It provides enough of an off-ramp. The Iranians are going to message domestically that they fired 14 missiles. There is some reporting that they are already telling the Iranian people that 6 impacted and had effects. Meanwhile, of course, we know that it was calibrated to have no impact whatsoever. So right now, it seems we're in a position, and President Trump even said as much, that this, as far as he's concerned, he thinks all parties need to move to a peaceful settlement. And interestingly, in that his final line there, he said he would encourage Israel to do the same, which I thought was interesting as well.
Do you think Israel is close to finished with its own war on Iran, or hard to tell?
Well, they said that they are close to accomplishing the majority of their objectives, which I assume was to dismantle, obviously, Iran's nuclear infrastructure, but also its ballistic missiles, its launchers, its Air Force, the small and weak Air Force that they had, and then really the defense industrial complex that supported those elements. Now, there may be some other things out there. There are probably more they can go after, but I suspect we are days away. To me, the challenge is going to be, how do they maintain the pressure on Iran while at the same time pushing hard terms, different terms of what Iran is probably expecting when it comes to some type of settlement on the way forward?
Secretary, I see how a weakened Iran is certainly at the advantage of the United States and its allies on the face of it. But I also wonder if there's a power void left from Iran's point of view and its proxy's point of view in the Middle East, as they have been so significantly weakened over the past couple of years, and if something else to be concerned about potentially fills that void.
Look, it's a good question, but it's hard to see what that void would be, because it has been for 6 years now. Iran has been sponsoring all the terror groups throughout the region, Hezbollah, Hamas, the Houthis most recently, Shia militia groups. And so the power void would be actually hopefully an absence of conflict and terrorism and threats coming out of one country that was intimidating its neighbors, particularly the Arab states, Israel and the United States. So look, we could end up, if this is played well, in a far better situation, but only time will tell. Again, to me, the negotiations coming up are going to be difficult. They're going to be tough because what we're going to need to have is some type of enduring presence in that country, surveillance of their nuclear infrastructure, and of course, immediately, we need to find out where those missing 900 pounds of highly enriched uranium is located and get that under control as well.
Do you expect Iran to allow us to find that out?
I don't know, honestly. They've proven to be quite intransigent, even up until the bombing of Fordow. Even today, they are striking back at Israel. We'll see if they've come to the recognition that if they don't step back, if they don't swallow their pride a little bit, this could continue to get really bad for them and their country dismantled. We see today that Israel's now targeting what they call symbols of Iranian oppression, right? Evin Prison, places like that where pointing out to the Iranian people that they don't need to live under this terrorist regime, that there is a better life out there. And I assume they're trying to provoke the Iranian people to rise up. We'll see. But look, this is where it's going to get tough, the negotiation, to see whether Iran will actually agree. And the first question will be, will they agree to talk even while Israel retains a presence over their skies to put pressure on them?
The current Secretary of Defense, Pete Hegseth, basically said over the weekend, deterrence has been reestablished, U.S. deterrence. Obviously a very secretive, but also very complicated, complex, and very successful by a number of metrics mission that was conducted here with Operation Midnight Hammer. How does it speak to technological prowess of the U.S. military, and how does it now set the stage for this NATO summit where member countries are expected to boost their spending to as much as 5% of GDP?
Yeah, look, there are two principal components to deterrence. One is capability, and the second is will. And I don't think anybody doubts our capability. And we once again proved that we have the capability to enter enemy airspace and bomb them and leave them without being attacked or even known. And that shows our capability. But I think importantly, it shows that President Trump has the will to conduct such operations when America's interests are at stake. So I think it does improve deterrence in that regard. With regard to NATO, we're already hearing out of NATO that the allies have agreed to 5%, although there seems to be some backsliding on countries like Spain. I am not happy by reports that they are going to achieve 5% of GDP toward defense by 2035. That's just ridiculous. It's way too long. We need them to increase spending dramatically. We're already years behind, and the Russian threat is going to continue to grow. In fact, we had the NATO Secretary General say not long ago that they think Russia could rearm and be prepared to go after NATO partners by 2030. So clearly the timelines need to get aligned and adjusted.
So we're talking about the possibility perhaps here for an off-ramp for kinetic strikes and retaliation by Iran, but how to assess other risks where Iran is concerned, whether it's from a cyber threat standpoint, or we've heard about sleeper cells, the possibility of hate crimes or domestic terrorism, or even Iran targeting individuals. And I ask this knowing that at least until recently, you had a full security detail because of those issues.
Yeah, look, I think those are all important considerations that I assume at some point will be discussed. They are far more challenging to go after. We obviously have a great law enforcement presence here in the United States at the federal level, beginning with the FBI and heading all the way throughout the states. But those are factors we need to consider. And I know of concern to your viewers is Iran can continue to threaten the Strait of Hormuz and cut off or inhibit oil supplies. That might be something to be adjusted. My priority would have been if Iran had hit us hard enough for us to respond aggressively, would be to take out the Iranian Navy, or at least those parts of it that could really inhibit the transit in the Strait of Hormuz. But right now, that seems to not be the case.
Mark Esper, former Secretary of Defense, it's great to have you on. Thank you for joining us.
Thank you, Morgan.
It's a volatile session we had here on Wall Street today with the latest geopolitical developments, but stocks did close at session highs. Treasuries were lower as 3 Fed officials have begun talking about lowering interest rates as soon as July if inflation remains subdued. Let's bring in Payne Capital Management Senior Wealth Advisor and CNBC contributor Courtney Garcia, along with CNBC Senior Markets commentator Mike Santoli. Guys, good to see you. Courtney, how can investors parse this, given that we're still sort of in this tariff window where the full tariffs aren't on, we're not sure what the tariffs are going to be, and we won't really know the effects, right, in July?
Yeah, well, I think the bigger thing that markets were worried about, at least the short term here, was everything that's going on in the Middle East. And I think the big concern was if you did see some sort of closure of the Strait of Hormuz or you saw any sort of damage to energy infrastructure, that is actually a much bigger risk that inflation's going higher from there. Because realistically, if you do see oil going above $100 a barrel, which people talk about if the strait were to be closed, you could easily see inflation going back above 5%. And you can see the gas prices above $5 a gallon at the gas pump. If that is no longer as much of a concern, I think that's what the markets are telling you after today, when we did see some sort of response and that was not the answer. You're seeing oil prices are coming down, which means the inflation story is actually more positive and more realistic that the Fed can lower interest rates. Because if energy prices have been coming down, which they have been over the last couple of months, that likely may offset some of the tariff impact of inflation. So that's really what markets are weighing out here. And they're more relieved to see what's going on in Iran than the upcoming tariffs, at least at this point in time.
Okay. Mike, how do you understand it? Some of the language here from the Fed speak, given that we haven't yet seen what the full tariffs are going to be, let alone felt the full impact of the tariffs.
No, we haven't. And you know, Chair Powell has been pretty resolute in withholding judgment and trying to preserve this wait and see type stance. And I do think the majority of the committee is largely there as well. That's what, you know, the outlooks from just several days ago at the Fed decision suggested. But I think a case has built as the economic surprise indexes have weakened, as you've seen some deceleration in job growth, and as you got a couple of friendly inflation prints. I think internally the direction of travel in terms of which way to lean would be maybe to try to get easier sooner and fit in another rate cut. I don't know that means all of a sudden July is in play, but I do recognize that there's some atmospherics around this. And it's fun because, as you said, we don't know what the final tariff terms are. We don't know how they're going to be implemented or when. And we don't know how much of that might be passed through and show up in inflation readings. I guess you have to have a theory of the case for all those things, or just say it's the Fed's job to sort of look through all of that. So it creates a sort of live debate. But from an investor's perspective, it's probably net bullish because at least the debate now includes more of a voice on the dovish side.
Courtney, do you think a peace premium is being priced into the market here?
Well, I think after today, that's really why you're starting to see the markets are recovering here. Energy prices are coming down. I think people are optimistic that there's going to be either no further escalation or maybe some sort of resolution that comes to this. And if that does in fact happen, you will see oil prices come down like you saw today. I think that is ultimately a bullish thing for the markets. So, you know, we're still in the midst of this. I think we've got to watch the news day to day. But based on everything that's been happening, that's absolutely what the markets are pricing in.
Mike, if we are finding ourselves, in fact, and I realize this is a big if, but if we are, in fact, moving past the worst of the geopolitical angst that we've seen playing out over the past, call it, week and a half, what becomes the next big catalyst for this market, especially since the S&P has been very range-bound?
I think it's about, Morgan, filling in the blanks on, you know, the end of the tariff pause. You obviously are going to need to know the shape of the federal budget. All this stuff is really within the kind of next several weeks horizon, I would suppose, from an investor's perspective. And then we're going to start getting, you know, second quarter earnings. And earnings have been the thing they've really kind of done their job. Mentioning earlier, you know, we've been at this level, the S&P, since, let's call it, early to mid-November. At least that's when we first got here on this run. And earnings are a good deal higher from there. So it seems as if, you know, that kind of treadmill kind of has to keep turning and have us keep walking it.
All right. Mike, see you in a bit. Courtney, thank you. Now KB Home earnings are out. That stock was up. Now it's down. Diana Olick has the numbers. Diana?
Yeah, it's mixed. It's a slight beat, John, for KB in Q2. EPS came in at $1.50 a share versus estimates of $1.46. Revenue of $1.53 billion versus estimates of $1.5 billion. But guidance on revenue for the full year did come in lower than estimates. In the release, CEO Jeff Metzger said, "Our team is producing improvements in two key areas, lowering our build times and reducing direct construction costs, helping to strengthen our business." Average selling price, interestingly, increased slightly to $488,700. You'll remember last week, Lennar reported lowering prices. Home deliveries for KB increased 11%. The company's housing gross profit margin was 19.3% compared to 21.1% the year before, but that was in line with expectations. So kind of mixed, Morgan.
All right, Diana Olick, thank you. and shares of KB Home down about 3% right now. Well, coming up, Iran fires back, attacking a U.S. airbase in Qatar. But markets rise and oil tumbles.
Up next, we'll ask State Department veteran Richard Haass if this is the extent of Iran's retaliation and what could be the next steps diplomatically when overtime's right back in 2.
Welcome back. Now that Iran attacked the U.S. military base in Qatar, what comes next for the Middle East? Well, joining us now is Richard Haass, President Emeritus at the Council on Foreign Relations. He's also a senior counselor with Centerview Partners. Richard, it's great to have you back on the show. Welcome. I'm going to ask you the same question I just asked Mark Esper, and that is this attack, which seems to be pretty limited and pretty well intercepted on Al-Udeid in Qatar. Does this now provide an off-ramp rather than an escalation in this dynamic between the U.S. and Iran?
Absolutely. It was designed to do just that, to de-escalate. The word that comes to mind is performative. This check the box of saving face, Iran retaliated or responded. But this was designed to avoid casualties, to avoid grounds for American response or escalation. So I actually take this as a good sign, and in some ways reflects the reality that Iran has other priorities right now other than, quote unquote, getting even, which it's not in a position to do.
What would those priorities be? And how much hinges on how much of Fordo and these other nuclear sites were effectively destroyed?
They have two priorities. The most important is to consolidate the regime. It's been attacked heavily by Israel, to a lesser extent by the United States. It's been somewhat humiliating for Iran because it shows that the government cannot protect Iranian sovereign airspace. So my sense is for the foreseeable future, Iran wants to calm things down, stop attacks on it, and essentially probably look for ways to improve the Iranian economy, thinking that will placate the people. I think over the longer run, and it gets to your second question there, I think what Iran wants to do is reconstitute its nuclear weapons program. My guess is one of the lessons they will draw from the last 2 weeks is this never would have happened. Had they had a serious nuclear weapons capability, that would have deterred Israel and the United States. I'm not saying that's right, but my guess is that's their lesson. So even if the attack, say, on Fordo and Esfahan and Natanz were quote-unquote successful, that doesn't mean the United States has made all sorts of significant progress towards denuclearizing Iran. What we don't know, in addition to any bomb damage assessment, We don't know what percentage of Iranian enriched uranium or advanced centrifuges or anything else are located in warehouses and basements we have no idea about.
Richard, Israel kind of tipped its hand, Netanyahu, to wanting regime change several days ago, and President Trump has kind of implied the same. So should we believe that they're willing to put all of that aside for the sake of peace and inspections now?
No, but the problem with regime change is, one, it's a lot easier talked about than implemented. It's a wish, not a strategy. Not a lot of history on the side of those who want to bring it about. If it's going to come, you really need, I think, it to come internally for the most part. I don't see the kind of broad-based opposition you would need that's organized. I don't see the regime crumbling. The last time we brought regime change to a country in some ways was Iraq or Libya. And Libya turned out to be a fiasco. It's chaos. And in Iraq, you saw what it took. It took massive, prolonged intervention. And even then, it didn't work out that well. Israel's not going to be in a position to do that. Obviously, neither are we. So again, I don't take regime change all that seriously as an option for either country.
So if you start to see actions that imply that that's happening, what would those be?
I'm sorry, what happening?
That Israel and the U.S. are pushing for regime change.
Well, again, I don't think we should. I think it increases the idea that you would have all sorts of fighting with Iran. No, I think what you'll see is Israel potentially going after symbolic political targets in Iran, conceivably some economic targets, but we're not going to want them to go after economic targets. The last I checked, we don't want to necessarily drive up world oil prices. We don't want to give Iran an excuse to attack Saudi Arabia oil facilities or to do something in the Straits of Hormuz. So I actually think we're going to keep Israel pretty restrained when it comes to hurting Iran economically. So again, I don't think it's a very useful conversation to focus on regime change. If it happens, if I'm wrong and it somehow bubbles up from within, okay, then we'll deal with it. But the idea that you could call in your generals and say, hey, I want to have regime change by Tuesday morning at 10 o'clock, there's no way they can take that order and translate it into policy.
I was speaking to Roger Zackheim from the Reagan Foundation and Institute earlier today, and he raised an interesting point to me. He pointed to this emerging President Trump doctrine that basically started in Riyadh a couple of weeks ago when the president said, my preference will always be for peace and partnership whenever those outcomes can be achieved always. And sort of pointing out the fact that the international community perhaps took that as President Trump being pacifist or isolationist, but given the events of the weekend and with the NATO summit coming up this week, and of course the read through to other countries across the world, that maybe the way to see this is that the U.S. will use strength, but only after an ally does its part and basically pays its fair share or contributes as well. Do you see it the same way? And if so, does that mean that the way the U.S. is approaching alliances is changing and maybe changing in a different way than everybody's been expecting them to?
I'm not sure I'm prepared to generalize, and what we've seen the last few days seems to be pretty particular circumstances. No, I think what you're seeing is an American foreign policy that's much more unilateral and less alliance-based. We see that in Europe. We see that in Asia. You just had the cancellation of important meetings with Japan, arguably our most important ally in the world. Obviously, there's a distancing from our allies in Europe, be it over Ukraine policy or over Europe more broadly. No, I think you're seeing, again, not an isolationist America, but a more unilateral America, and probably still very careful about the use of military force.
Richard Haass, great to have you on and get your insights. Thank you.
Thank you.
Well, coming up, today's market reaction might not have been what people expected following Saturday's U.S. attack on Iranian nuclear facilities. Stocks up, oil way down, bond yields falling as some Fed governors talk about cuts, and gold only modestly higher. We're going to get more into those moves when Overtime comes right back.